Hi, a very good day everyone. In this video, we are going to present the financial analysis of two private listed companies that starting with letter K, which is Kawan Food Berhad and Kobay Technology Berhad. Beyond that, we will analyze the financial ratio in order to assess each company performance and undergo comparison to determine which company has the best performance. Before we get started, I would like to introduce you to the team. Me, myself, Ujisian, metric number 271-878, will provide a quick overview of both companies and discuss the liquidity ratio. Sun Wei Jian, metric number 271-994, will discuss the activity ratio and profit margin ratio. And Lu Qingyi, metric number 271-979, will discuss the return on asset ratio, leverage ratio, and summarize the financial analysis result. Kawan Food Berhad is a Malaysian investment holding company that works in the food processing sector. The main business activity involves the manufacturing, sales, trading, and distribution of frozen food products. With a history spanning more than 60 years, beginning in the 1960s, Kawan Food Berhad has developed into one of the Malaysian top exporter and the world top producer of frozen Asian food delight. On the other side, Kobay Technology Berhad was established in the year 1984 and listed on Bursa Security Berhad main market since 1997. Kobay's strategy business section included real estate and manufacturing sector. Kobay is a market-leading manufacturer of precision component, tooling, automation equipment, and fabricated structures for the global industry sector of aerospace, semiconductor, E&E, and O&G subsea. Comparatively, both companies are engaging in totally different business activity, and it is quite interesting for us to have a look at their business performance and make comparison. First is the current ratio. The current ratio used to measure the ability of an organization to pay the short-term obligation or those due within 1 year. Based on the result, the current ratio of Kawan Food Berhad is 3.75 per 1, which means the company has a desirable situation because the current ratio is greater than 1 in the year of 2021. It also means the current asset were 3.75 times the value of current liabilities, where the current ratio of Kobay Technology Berhad is only 3.0 per 1, which means lower than Kawan Food Berhad. In this case, the Kawan Food Berhad has improved its liquidity compared to Kobay Technology Berhad in the year of 2021. It indicates the increase of the ability of the firm to meet its current obligation on time, and this can increase the trust of creditors, suppliers, investors, and also partners to the company. Following that, we have conducted the quick ratio calculation. The quick ratio communicates how well a company will be able to pay its short-term debt using the only most liquid of assets. A company that has a quick ratio less than 1 may not be able to fully pay off its current liability in the short term. But a company have a quick ratio higher than 1 can instantly get rid of its current liability. Based on the calculation, the quick ratio of Kawan Food Berhad is 3.01 compared to Kobay Technology is only 2.3 in the year of 2021. This means that the company has 3 ringgit and 1 cent for liquid asset available to cover each 1 ringgit of its current liability in 2021. It also shows that the company has enough quick asset to pay for its current liability in 2021 because the quick ratio is greater than 1. In this case, Kawan Food Berhad has more enough asset to be instantly liquidated to pay off its current liability compared to Kobay Technology Berhad. Moreover, the drawback of maintaining a high quick ratio indicates that the company may not be making effective use of its cash to grow its business. Now I will pass to the next presenter.
Hi, I'm Sun James with the metric number 271994, and now I will continue to presenting about the activity ratios. Firstly, is about the total assets turnover. Total asset turnover is measures how efficiently a company use the asset to generate sales during the periods. Higher total assets turnover ratios means that the company using the assets more efficiently in generating sales, while the lower total assets turnover ratios means that the firm is not using the assets efficiently in generating the sales. Kawan Food Berhad has a total assets turnover ratios of 0.57 times in 2021, higher than Kobay Technology Berhad, which is 0.53 times. It means that Kawan Food Berhad generated sales of RM 0.57 ringgit of asset in the year 2021, while the Kobay Technology Berhad generated sales of RM0.53 per ringgit of assets in the year 2021. It's clearly known that the performance of total assets turnover Kawan Food Berhad is better than Kobay Technology Berhad. Next is about the account receivable turnover. Account receivable turnover is measures how often accounts receivable are rolled over during a year. Higher ratios means that the firm can collect its debt more frequently and thus have few bad debts. In 2021, Kawan Food Berhad has a receivables turnover ratios of 4.50 times, while for Kobay Technology Berhad, the ratios is 39.02 times. It can clearly note that the performance of account receivable turnover Kobay Technology Berhad is better than Kawan Food Berhad due to collect debts more frequently and thus have few bad debts as compared to Kawan Food Berhad. In addition, is about the profit margin ratios. The profit margin ratios display the percentage of revenue that remain after all costs have been covered by the company. The profit margins on sales of Kawan Food Berhad is 13% in 2021, shows that it had a net income of RM0.13 for each ringgit of sales generated in 2021, while the profit margins on sales for Kobay Technology Berhad in year 2021 is 17%. It indicates that it had a net income of RM0.17 for each ringgit of sales generated in the year 2021. A good margin will vary considerably by industry, but as a rule of thumb, a 10% profit margin is considered average, a 20% margin is considered high, and a 5% margin is low. Therefore, the margin profit for Kawan Food Berhad and Kobay Technology Berhad can be considered as moderate, but Kobay Technology Berhad can generate higher profit margin than Kawan Food Berhad.
Hi everyone, I am Luchigi, metric number 271,979. Now I will continue with the profitability ratio, which is the return on asset ratio. So for the Kawan Food Berhad, it has a return ROA ratio of 0.07, which means like 7% in year 2021. It means that every 1 ringgit asset flow into the company or invested in the company can generate as much as 0.07 cent as profit. While for the Kobay Technology Berhad, it has a ROA ratio of 0.17 in years 2021, which means it can produce 70 cents of profit for every 1 ringgit asset invested into the company. Next is about the leverage ratio. And one of the leverage ratio is about the debt ratio. So for the Kawan Food Berhad, the debt ratio of Kawan Food Berhad is 0.15, which is 50% for the years 2021. This indicates it could pay off 50 cent liability for every 1 ringgit asset invested. For the Kobay Technology Berhad, it has its debt ratio is about like 0.06 or 6% for the year 2021. This shows the company have 1 ringgit asset for paying 0.06 cent of liability. Now for the second of leverage ratio is the debt equity ratio. So for the Kawan Berhad, the debt equity ratio is recorded as 80% of 0.18 in year 2021. This indicates the company could pay off 80 cent liability for every 1 ringgit equity invested. For the Kobay Technology Berhad, the debt equity of the company is around 6% or 0.06. It shows that the company have RM 1 ringgit equity for paying 0.06 cent liability. For the conclusion, Kawan Food Berhad and Kobay Technology are industry-leading manufacturing with strong market performance in their respective industry. Both companies have strong financial results and are not exposed to significant liability. Additionally, the business excel in generating revenue. Both businesses are anticipated to continue expanding and producing excellent outcome in the future. So that's all from our group. Thank you.